Welcome back, ladies and gentlemen, to part 2 of this podcast episode on accidental Americans. I'm still joined by Shawntel, Randi, and Alexandra Crean, both US attorneys with the firm Nixon Peabody. In the first half, we were talking about accidental Americans, what they are, how you can be an American but not realize it, and broadly what the US tax consequences are. We're now going to look at what our accidental Americans should do now that they've found out they're an American. And Shawntel, I'm going to come to you first. Let's say this person is delighted to discover that they have another passport, their citizenship. They can now work and live freely in America, and they've always wanted to chase that American dream. What should they be doing first if, let's assume, they've never filed a US tax return before?
So I think the first thing to do is not to panic. I think a lot of people tend to figure out that they're American. It's, as we're saying, this accidental American they didn't know before then. And what they're going to do as a US citizen is that they would have had annual reporting requirements. So they are delinquent with their US tax filings. And I've seen people panic before and kind of put their head in the sand and not want to come forth and not want to deal with it. But they should know that, especially if it's been non-willful, meaning that you truly didn't know you were an American, you didn't know you had this tax and reporting obligation, the sooner you find out and come and speak to a specialist and get help, the better your filing options are going to be. Because you're kind of these disclosure programs that the US has at this point in time, there's basically 2 buckets. There's the willful compliance programs, and then there's the non-willful. And when we're in the non-willful, meaning you truly were this accidental American through no fault of your own, you weren't complying with the US tax and reporting requirements, you then get to use some of these programs. If you're living outside of the United States, you can actually just file your past 3 years of returns, your past 6 years of FBARs, which is the foreign bank account reporting forms, and you just pay any tax you otherwise would have paid, any interest due on this, but there's no penalties associated. And again, this is if you truly didn't know it was through no fault of your own, you get to use these programs. If you were within the US, it tends to be a harder position to come to, that you didn't know you had US tax and reporting, but there would be a 5% penalty placed on your highest foreign financial assets at that time. Those are the non-willful programs. Now we move into the realm of the willful programs. Let's say that you maybe knew for a bit that you had these, you were a US citizen and maybe you just didn't report some of your foreign accounts, or you owned property somewhere and rented it out and you never reported that. Again, don't panic. Just seek professional help that really specializes on the US legal side of things to make sure you're not exposing yourself unnecessarily to the IRS and the US legal system. But then you can also come forward. There's some different programs you can work with the IRS on. And what I always tell clients is it's just so much better to be the one that comes forward to the IRS, because the second you receive a letter from the IRS saying, hey, we've noticed you have this Swiss bank account, you never declared it, the chips are off the table. You don't have the bargaining power. They have all the power then. So really, I know it can be a bit scary, but it's always worth being the first one to the table when it comes to delinquent US tax and reporting obligations.
It's a bit like the parent who says, I'd rather you came to me before I found out. You're always going to get in less trouble if you come forward with clean hands than if I've got to come and find you first, and then I know, and now I'm going to be angry because you weren't honest with me.
Yes, exactly. And maybe I'm just speaking from childhood experience of not perhaps doing that and learning the hard way. So now I'm just even more proactive in advising my clients to be proactive.
I think also we're not only borrowing, childhood experiences, because I'm very much the same, but we also are seeing a trend in the US about the IRS taking aggressive positions when it comes to reviewing these filings and then assessing penalties nevertheless, or saying that activity that's, or steps that are taken and are explained in, what we call non-willfulness statement maybe aren't as innocent as are being claimed. So I think we're also sort of in an environment where the IRS is maybe a bit skeptical about somebody saying they didn't know any better and sort of looking, with a closer eye towards it. So even more reason to at least act quickly to get the right people in place to help you, go through the process and do the right thing and be on a path for compliance moving forward.
The point you raised there, Alex, was a really good one, because it was the point I was going to come to next, which is, do you have any sense of where the line is drawn between willful and not willful? Because you could imagine the IRS, I could imagine the IRS saying, well, you were born in the US. It's quite clearly laid out in our Constitution. There's not that many different articles of the Constitution. You should have known about it, sort of constructively, you should have known about it, as opposed to you once went to see an accountant or a CPA or an attorney who told you were an American, and then you stuck your fingers in your ears and decided not to do anything about it. Is there any kind of precedent or guidance from the IRS as to when you would fall into which of Shawntel's two buckets, willful or non-willful?
That's a great question, and it really is one that we are in a bit of flux on. But from what I am seeing more of in terms of cases that are making its way through our tax court system is, I think it is more action taken after you really do find out that you have these obligations. And I think it is not only like how quickly you are acting, but I think just how forthright you are about, what you should have filed. And so I think another thing that when we are sort of, advising clients in this process is to just put it all on the table and to just be really open about, what you are disclosing and to not be cute about it.
Because to be clear, and this is also something that we have touched tangentially in this podcast before, if you are a US citizen and thus subject to taxation by citizenship, there's every chance that you're already being taxed to another jurisdiction's tax code at the same time. So, in this context, say the UK tax system, if you're a UK resident and you've been in receipt of, let's say, I don't know, your UK employment income and should have been reporting the US tax on that UK employment income, well, the fact that you may have had a technical filing obligation is one thing, but in all likelihood, you probably would have received a credit from the US for the tax you'd paid in the UK already. And because our tax rates here in the UK are marginally higher on income tax rates than the federal level of income tax in the US, there may actually have been no US tax to pay anyway. So it's more about bringing yourself up to date and speaking to the appropriate advisors who can tell you, yes, okay, you may have this positive obligation, theoretical obligation, but there's not actually necessarily huge amounts of tax. Now, in this realm, there are plenty of circumstances where tax can arise in one country, but not in the other. And we've touched on living trusts, LLCs, IRAs before as being, certain areas for comment. But am I also right that if you should have paid tax, Alex, previously, but you're now bringing yourself up to date, will those foreign tax credits still sort of apply? Will you still be off the hook? Or is the IRS going to take a harder line on the availability of, say, a foreign tax credit because now you had your chance 5 years ago and that's now too late?
You're absolutely right, Aidan, in that you will have, if you're in the UK and have paid tax on UK tax on your income, you're going to get a credit for that, most likely under the US-UK tax treaty. Like you said, the UK tax is higher than US federal tax on most income. So you're going to get the credit and you're not going to have any tax due. It's just a reporting obligation. But the number one thing to remember with that is having a really great team behind you, having those legal advisors that are going to get you set up and straightened out, and then have a great accountant that knows the US and UK side of things to make sure that you're utilizing the credits and deductions on both sides of the pond.
And if I've learned anything from speaking to my accountancy colleagues here in the UK, the dual qualified US-UK accountants, they will tell me that you're always better off than if you're filing your tax returns contemporaneously in each jurisdiction, making sure that, for example, if you're on the paid basis in the US, that you have paid any UK tax up front, ideally by the end of the calendar year in which that tax has fallen, so that the credits are there and available to be credited against your US income when you then come to report your US income. Are you risking that just being less likely to be available if you're then late by 5 years filing? Possibly, possibly not. It depends on your circumstances, but it's just another example of you might as well be filing as contemporaneously as possible. Don't leave it that way. I imagine you're just likely to meet disaster. So just to check, that's those clients who are very well behaved and come forward and say, yes, of course, thank you so much, Nixon Peabody, for telling me that I should have been an American. How quickly can I sign a check over to you? What are the consequences if the IRS find out and say, you should be paying tax, and you say, with respect, I can show you where you can stick your notice? clearly, if that American is overseas, the IRS's ability to enforce is going to be slightly more limited. But presumably the IRS is not one to let a fight go if they see that they've got a chance of winning?
Yes, the IRS has a long reach, and we would never advise a client to just ignore it. The world, as we all know, is much more global and international. So to think that, oh, just ignore it, I'm not in the US, I don't intend to be there, not a great plan.
No.
What we do advise is sometimes clean it up. And then if you don't want these US tail anymore, you can expatriate. You can give up, whether it's the citizenship or the long-term green card holder. If you want to give it up, fine. But again, there's a lot of planning that needs to go into place prior to the actual formal expatriation.
And Shawntel, you have teed it up beautifully. So let's say we have this person who goes, what you're telling me I'm American, definitely didn't sign up for that. How quickly can I get out of this net? You're now talking about giving back your US citizenship that you've only just discovered you've had. There is presumably, for the non-compliant American, there is a compliance exercise to be completed first prior then to any discussions about expatriation. Are the IRS even going to allow you to expatriate before you've brought yourself into compliance?
So, Aidan, you're exactly correct in that you must become compliant with your US taxes prior to expatriating. Because the US tax system isn't complicated enough, the US has an additional tax regime that applies to expatriates. And what this is called the exit tax. And what it does is if you are considered a covered expatriate, you are subject to a 40% exit tax. It's a mark-to-market exit tax done as of the day before your expatriation. And to avoid being classified as a covered expatriate, there's a couple different things that you have to consider. One is that, as you were saying, you must be compliant with all US taxes and reporting before you expatriate. Another is they call it the net worth test. You have to be under $2 million in your net assets the day before you expatriate, which for some people, that's just not an option. You're not going to get below it, and you're going to be this covered expatriate and subject to the exit tax. And then the third prong, or the third way that you can be considered a covered expatriate, is the income tax test. And I believe it's over $180,000 now in the past 5 years, the annual income tax that you've been paying to the US government. And so if you fall into any of these three categories, you're going to be considered this covered expatriate, and you're going to be subject to the 40% mark-to-market exit tax. That being said, if you're not, you just have to be fully compliant. You give up that passport by formally giving it up, filing the proper paperwork, and either leaving the US or making sure you're on a proper immigration visa. And then you're no longer subject to this worldwide income and asset taxation system.
Am I right? And I say, am I right? Because I hope I am, because I did this myself. That were you to find yourself to be an accidental American, but you are, say, living in the UK and are a UK citizen, and you would have been an American from birth, there are certain exemptions from some of those wealth tests as an expatriating American, and you just need to make sure that you are compliant at that point.
Absolutely. Absolutely. And this is we get very excited when clients come to us and we find out that they fall within this exception, because like you said, it makes it much easier. You don't have to do the income tax analysis or the net asset analysis. But as you highlighted, it's not just having dual citizenship. Some people think that's the rule, and that's really not it. It's you have to be dual citizen from birth, which again is basically means parents, right, that are from both countries, citizens at birth, and you must be a resident and taxed as a resident in the other country, the one besides the US. So it's like I said, very favorable exception to fall into when you're doing the expatriation analysis. But there are more requirements than just being a dual citizen.
I did for a number of years like to sort of joke that if only the partners or my bosses here would have paid me more money, I could then have worried about being a covered expatriate, and I then have an example to give when it came to having these discussions. As it turns out, I'll find any way to shoehorn that in as possible, to which my boss's response was, no, I was never going to pay you that much. And frankly, it would have made a difference anyway because you were a dual citizen from birth. And I'm like, oh yeah, that's true. Any sort of leverage to try and pull over your bosses to get more money. I hope they don't listen to this part of the podcast, but it's about 80% of the way through, so they probably won't. So in thinking about the filing process, let's say you are someone who hasn't been compliant, but let's say you are someone who is uninteresting to the IRS. You are someone who maybe has just had a UK salary. You may have sold some stock. You may have some capital gains. We're not talking anything that the IRS is going to particularly get interested in about. Is the process of bringing yourself up to date, is that a particularly simple process? Do they have programs that allow someone who wants to bring themselves into compliance in one go? Can they do that in a slightly more streamlined fashion? Or is it just like filing 3-5 years of tax returns and we're going to need every piece of information, thank you very much, over the last 5 years?
Probably a combination of those. It is going to be some filing, but there is going to be, again, an explanation about why you weren't filing. So obviously, things were pretty simple, then the filing should be pretty simple, but it's still getting at the heart of why you didn't.
Yeah, Aidan. So it is, even if you're just that simple wage earner, sold a little stock, you're not the crypto billionaire or something like that, that we think, again, let's caveat all of this saying that we are making assumptions about what the IRS thinks is interesting and not interesting. My crystal ball, while it is well polished, I don't know that it's necessarily able to read the mind of the IRS and determine what they think, what they're going to audit, what they're going to look into. Our clients always want that answer, right? And we always have to say, we can tell you what trends are, what we're hearing from other professionals in the field, but the IRS is the IRS for a reason. And that's because we can't truly predict, which is probably good for our job security in a way. But for our clients, it can be a bit frustrating that we can't tell them exactly what they're going to do. But that being said, if you were just a simple wage earner, you've sold a little stock, maybe you bought a home, something like that, you still have to undergo, you would do the streamline, saying you're living in the UK, you do the streamline offshore disclosure program, which we previously discussed, is that previous 3 years of returns, 6 years of FBARs, and that non-willful statement saying, mea culpa, I didn't know I was supposed to be filing. Here's all the reasons why. As soon as I did know, I contacted professionals in the field and they've assisted me. That's ideally that statement we want to get to. And as Alex had said before, a big part of that is as soon as you do know that you are supposed to be filing, you come forth and you get the advisors, you get the team behind you, and you take the steps.
So you have your tax returns sorted, you've done all the necessary returns, you book your appointment with the embassy, as I did a couple of years ago. You go along to the big scary embassy in London with all the men with big guns, and then you must remember to pay your administration fee to the IRS or to immigration services for expatriating, which at time of checking 2 years ago was about $2,500. So don't forget that the IRS will certainly take one last chance to have some of your money before you do finally part ways permanently. That is a discussion for another day. Alex, Shawntel, thank you so much for joining me over these 2 episodes. It's been wonderful to speak to you about these issues. If anyone does have questions where they think they might be an American, they've just discovered they're an American, or want to find out if they're an American, then I have no doubt that if you Google Nixon Peabody, you will find Alex and Shawntel quite easily. All that leaves me to do is to thank Shawntel, thank Alex. It's been lovely to talk to you both. To you, the listener, thank you for joining us. If you do want to rate or subscribe or star us on whatever podcast listening app you want to do it on, we'd be most grateful. It helps people find us, and we will look forward to seeing you again another time.